Good morning, everybody, and welcome to our latest webinar, How to Ensure an R&D Tax Claim is Robust, with Kevin. Over to you, Kevin.
Okay, Sarah, thank you very much for that. Good morning, everybody. Thank you for joining me for this webinar on how to ensure an R&D tax claim is robust. By way of an introduction, I'm an R&D consultant. I've been working in R&D for 6-7 years. Interestingly, if you do the maths there, that is at the time when all of the good times, in inverted commas, were coming to an end, and Brexit occurred and lockdown occurred. So I came into this market eyes wide open in terms of some of the risks, and my background actually is sort of commercial risk background, coming out of a banking background, but I've been working with another consultant for over a year, putting cash flow solutions together, which involved R&D tax claims. So I got to know that consultant and their firm and how it worked really well. So basically, I decided after the level of inquiries went up dramatically, sort of mid 21, I got an opportunity to go into the defence side or the tax dispute side of the business. And really, that's what I've been doing ever since. So my personal goal was to use accurate information to help defend companies that had made an R&D tax claim that were fundamentally experienced some difficulties with HMRC and compliance checks. So I think it gives me a slightly different angle. So some of the information you've got here will be factual, that you can pick up from HMRC manuals, etc. And some of this is based on my experience over the last 2 to 3 years, where I've come in or been invited in to defend claims that are really quite late into the process. So very often the original advisor has had a go at defending that claim, and basically didn't know what to do or where to go, particularly with the strategy and how to handle HMRC. And I've picked it up at that point. So I think I've got quite a unique insight into the market from the inquiry perspective. And I've used that information to put this webinar together for you. So let's just have a look at what we're going to cover quickly. We've got about half an hour, 25 minutes allowing for a few questions, but there's quite a lot to get in. So I'm going to keep this relatively high level with a view to you putting inquiries in to us afterwards, or questions, and we can handle any more detail after that. But basically, what is the current claim process? Are you up to date? Have your advisors, if you use them, or are you up to date yourself with the legislation? What's a commercial project versus what's an R&D qualifying project? And qualifying means for tax purposes from HMRC's point of view. What's the difference? Might sound simple, but actually nearly every dispute, every inquiry I've looked into, people are getting these mixed up all the time. Then we're going to drill in a little bit to the actual project focus and some of the common mistakes and recurring mistakes that I see regularly. And then looking at project structure and cost apportionment, which is almost like the next stage that goes wrong, particularly if you're defending a claim where you might have validated the R&D, but then the actual cost apportionment, and there's very often an overclaim. So what are the considerations there? And finally, if we've got time, we'll move on to sort of other considerations which are more specific to certain sectors, if you're compiling a claim for those. So there's just some common areas to be aware of that run through the scheme. So moving on, the current claim process. So pre-notification is basically where from 1st of April 2023, a new claim would need to be pre-notified, and it would need to be pre-notified within 6 months after the accounting period is finished. And if it is outside of that, and the claimant hasn't made a claim in the previous 3 years, a valid claim in the previous 3 years, then they would lose out on that particular year. I'll give you a live example actually. Only last month, middle of last month, October, I was asked by a company to process a claim for a March 25 year end, which obviously meant it was a 1st of April 2024 claim. So if you add 6 months onto the March 25, you end up with a pre-notification form deadline of September 2025. Well, clearly, I was talking to them in October 2025, and it was 2 weeks outside of that. So we then had to look back to see if we could look at the 3-year exemption window. And what you do is you go back 3 years from September 2025 to the date of 1st of October 22, and then you have to look at the CT return and when was that actually filed. And I always use the receipt that is time stamped by HMRC. Now in this instance it was unusual again that they put their 22 and 23 year end claims together in one go, and they'd actually put their revised or amended CT 600 through. It was actually on the 12th of March 2024. Now, unless you know your R&D really well, that is actually after the 1st of April 2023, and therefore it breached that deadline as well. So this particular company had some bad news. They reckon they'd got about £160,000 worth of costs, and they couldn't make the claim. So that's an example of how important pre-notification is now. So the rule of thumb is you need to pre-notify within 6 months of the accounting period year end. The next change, which has come in since 8th of August 23, if my memory serves me correctly, is the additional information form. And this is basically a summary of the whole claim that would have been referred to in the pre-notification. And another thing that's important to note here is the amount of detail that HMRC require. Fundamentally, as advisors, you would need to compile pretty much a full technical report and some extra information to complete the additional information form. So again, I'm not going to go into loads of detail here today, but I think in terms of timing, you have to actually submit, and it's all done online, the additional information form before you then file the whole claim. And the whole claim, which is points 3 through to 7 on the screen, are the ones that most people are familiar with. So it's points 1 and 2 that are the big differences, and that have really come into play, I think, really since the 1st of April 2023. So I'll go into a little bit more detail on what's in the technical report and financial schedule. But to me, a technical report basically will provide fuller information over and above the summary information that you put into the additional information form. And another point to note, you do need to make sure that the information in the AIF, the additional information form, actually matches that in the technical report and the financial schedule. If there's any mishaps there, and indeed the tax computation work. So it's very important to get all these forms and online forms cross-checked. The financial schedule will include all of the qualifying expenditure. And again, if you know your R&D, there's a certain amount of costs that will qualify. And also a point to note that you need to know the difference between direct and indirect costs these days. And direct costs are basically those associated with directly resolving the technical uncertainty. And the indirect costs are what they say on the tin, which is those costs where they're indirectly involved in helping resolve the uncertainty. And then really, as I think I'm talking mainly to accountants today, the points 5 through 7 are really your domain in terms of then taking the total qualifying expenditure and through your knowledge of the schemes, making sure the tax computations and CT 600 or amended CT 600 are completed correctly. Then once you've got all of that together, make sure the additional information form is submitted before you do the final filing of the whole claim. And that's basically the claim process. So it's a lot more labour heavy now on the front end than it ever was. And this is indeed what I think has put a lot of advisors and accountants off actually doing new claims, which is a shame, because I think the timing to do claims is good. The scheme is strong if you know what you're doing, and with 5,500 new tax inspectors being employed, some of which I'm sure will end up in the R&D pool. You do need to know the process really well to make sure you get it through. But I'm a passionate in banging the drum to make sure if companies do actually qualify for this, bearing in mind it can't be sold, you either qualify through the projects you're doing or you don't. That people are encouraged to make claims, because it's still a worthwhile exercise in terms of the money they can get back from HMRC for their corporation tax. Okay, so commercial projects versus for tax purposes projects. What do I mean by that? Well, for me, I've just tried again keep it as simple as I can by looking at the three key areas where I see a lot of misinterpretation or misdirection in terms of the narrative that gets presented to HMRC. So taking the top point, focus on the technical advances, not the functional advances. And that's very closely combined with focusing on the technical uncertainties involved in making those advances and not the commercial uncertainties. So maybe an example of this might be, I don't know, let's take a recruitment firm that decides to develop its own software to make its processes better. Now, that could be interpreted as not really having any technical advances if it's not actually advancing the area of computer science, because it's the software that is creating the advance, even though the software they produce will be functionally advancing their own business. So it's actually looking past the function and looking at what technical expertise and technical advances occurring behind the functions. And if you can't actually define a technical advance in for tax purposes terms, which is how HMRC want to see it, it's then very difficult to actually expand on what technical uncertainties are involved in that project. It's actually quite easy to look at the commercial uncertainties, which might be, well, yeah, we engaged a software company to build this for us, but they weren't sure and we weren't really sure if they could do it. That's not enough. There will be an expert, hopefully in the recruitment firm, that knows something about software, because if you haven't got an expert actually in the company that's claiming, you can still have an expert externally or a subcontractor, which might be the software developer in this case, that could get involved. And would have to get involved, and it's those people that are qualified to define a technical uncertainty when making a claim for tax purposes. So I see an awful lot of functional references and commercial references when I see reports for the first time, which I then have to unpick and rebuild to actually defend a claim. And sometimes there isn't any for tax purposes activities within those claims, so it can be bad news for the claimants. And then finally, if you do actually get through 1, 2, 3, 4, however many projects the company wants to make a claim for, you then have to move on to the next stage, which is looking at what qualifying costs actually can they claim for. So after you've defined the R&D project by project, you then have to define project by project the qualifying costs for each project, and not the routine costs that the company would have incurred anyway. Now, that's quite high level. I think I could talk for half an hour on the qualifying costs and the not claiming for the routine costs. And also, when you look at direct costs and indirect costs, there's a bit of an overlap there, which I'm not going to explain today, but I'm more than happy to have a conversation with anybody if they want to get in touch afterwards. So at very high level, I hope that demonstrates that just because a company takes on a project, it might be a very clever project, it might be something another company's not done before, but if it's not advancing a sector in a technical or scientific area, and it's only advancing something within their own business with technology that's maybe been used before, then it's not going to be a project for tax purposes. Or there could be a grey area in there where you need to go in layer by layer to actually put it into the structure that HMRC expect to see by defining some of the technical advances and technical uncertainties. Once you've done that, you can move on to the qualifying costs. So let's have a look at a qualifying for tax purposes project and some of the more key areas that I see are pretty weak in an awful lot of claims that I read and review. So the first one is maybe to explain what is a competent professional. Well, in HMRC terms, this would be a person ideally employed by the claimant company that is both professionally qualified and has years of experience in a particular field of science or technology, which is directly related to the actual claim that you're making. Now, if you haven't got one of those, you can get competent professionals that exist in subcontractors, for example, but it becomes harder to defend if they're not actually employed. What's the actual area of science or technology you're claiming in? I see this so wrong, and if you look at the example I gave you before, they might have been claiming in developing some sort of software program, but it's actually computer science is the area of technology, or IT development, or software development. So actually defining the right area of science or technology is key to then explain the rest of it. Can you establish a strong technical baseline for each project? Well, I wonder how many people listening to this actually even know what a baseline for the project is, because I think nearly every claim I review hasn't had a technical baseline defined, and this is something that if you haven't got a baseline at the beginning of a project, you can't gauge where the technical advance is within a sector, and this actually trips up an awful lot of claims, and HMRC are well within their rights to challenge a claim if they don't understand what the starting point of each project was. And basically, you need to concentrate on how things were done, how things were overcome, and not what the things were overcoming. And that's again coming back to the difference between looking at functionality and commerciality. And then the uncertainties, I think they can be quite hard to get a narrative around. And this is why you need a competent professional who's qualified to, one, define them, and then actually work out how easily they could be solved by other people in that area of science or technology and in the same area of work as them. So really, if you look at how a project needs to be focused, it really needs to be quite defined to qualify for tax purposes. Project structure and cost apportionment. So let's assume now that you've got at least one project defined, structured in the right way. That structure really needs to define the baseline, define the technical objective, define a competent professional, define the technical uncertainties, and then you need to navigate through the narrative how the costs are then actually apportioned against the parts you can actually claim for. So if you can do this in lay terms rather than overly technical terms, which is a skill in itself, then that makes it easier for HMRC to understand. If the projects actually span multiple claim years, just be aware that the baseline that you set originally might have changed after a year, that if you've got your finger on the pulse in your sector, then you'll be aware if any of your competitors have caught you up or overtaken you. You may need to reassess your baselines and your technical uncertainties year on year. And it also means that each claim for each year is a claim in its own right. Know what you can claim for, and I'm back to the qualifying costs again, things like staff costs, subcontractor costs, externally provided workers, utility costs, consumables. I'm rattling a few off just to give you an idea that there's quite a lot that can qualify. I've already mentioned direct and indirect costs. So again, who's directly involved in resolving the uncertainty and who's not directly involved, but usually helping the people that are directly involved, they can be included. And what assumptions have you actually made to apportion the costs? The biggest one I see here is on staff costs, where you might get even 100% apportionment of a project on a person's time. Not wise, in my opinion, to use 100%, because I don't think any person, even if they're a full-time R&D perfect, competent professional, will be working on that project for a whole year for 100% of the time. Evidence to prove each project in cost. Again, once you've identified R&D, identified cost, you then need to evidence each project and evidence those costs. And again, it's a large area of weakness I see when looking to defend a claim, that very often I can be looking at claims that are 2, 3, 4 years old. And of course, the evidence is either not saved in the first place or not there when I look for it. So again, bear in mind, you need an evidential trail if you're going to defend a claim successfully. And of course, flipping it on its head, if you do all of this up front when making a new claim, then of course it's got a better chance of being robust and less chance of being highlighted by HMRC. So what other considerations are there? So again, a whistle-stop tour of this, but some of the rules through the new merge scheme have actually changed recently. So if a company is contracting out R&D, or if indeed a company is taking on subcontracting work of R&D, the rules have changed. In a nutshell, you need to be able to define which company actually thought of and instigated and was aware of the R&D involved in the first place. So this has really shaken up how contracted out and subcontracting R&D works. It would need another conversation to go into the detail there. And again, evidencing that can be quite a challenge. Grants and subsidies, a bit of good news in a way. Some of the older schemes, the pre-April 24 schemes, grants and subsidies did affect an R&D tax claim. Well, now they don't. So that means that you can actually take a grant and a subsidy and an R&D tax claim, and that R&D tax claim is not diluted by grants and subsidies. Externally provided workers, again, the rules have changed. The government, I suppose quite rightly, want to try and keep all of the research and development in the UK. So if R&D is being exported out and not done by people on UK PAYE payroll, then they're not going to be included. And then another presentation in itself would be around intensive R&D and loss-making claimants. The good news is they can make a claim, but they tend to get a tax credit back as they've not generated profit. And that fundamentally ties up the whistle-stop tour of the main areas of things that can actually stop a claim being robust. So clearly you will need to be up to speed with your legislation and some of the nuances as they've changed over the years. And that basically ends my presentation. I think I'm on about 25 minutes, leaving a little bit of time for questions.
Oh, thank you so much, Kevin. That was really interesting. And yeah, I have got a few questions come in. The first one is, if a company is late in filing at the pre-notification, can the year end be extended to give a potential 6-month extra time period to submit?
In a nutshell, it can. Obviously, that has to be commercially viable and acceptable to the claimant company, but you can extend, and again, that provided they haven't extended, I think, within the previous 5 years. Again, I am not a qualified accountant, so that's really one the accountants can answer better than me. But in principle, absolutely, if they wanted to extend the year end, that can then buy you another window of 6 months past the extension. You just have to be aware that you might then have to put in 2 additional information forms for the accounting periods, which you've then split into 2, like a 12-month and a 6-month period.
Perfect. Another question has come in. How many R&D schemes are currently in existence?
It depends how you look at it. I think the answer to that technically is 5. But if there was a new claimant looking to make a claim at the moment, right now, I would say it was two. So just running through those, there's what I call the old large RDEC scheme and the old SME scheme. And then for accounting periods starting after the 1st of April 2023 to March 2024, there's one called an R&D intensive scheme, and in fact that was live before, but they changed the thresholds on that. So what's hard to explain is some of the changes that have occurred over a period of time. And then, as I mentioned earlier, there's two current ones: the new merge scheme or the new RDEC scheme, which is based on the old RDEC scheme with some changes, and indeed something that's called ERIS, or the Enhanced R&D Intensive Support Scheme. And the intensive schemes are the ones that are applicable under certain conditions for loss-making businesses. So I think it's five. For new claims, it's definitely two, but from where I'm sat, where I still have to understand all five.
Thank you. Another question is, what is catching most people out with HMRC when making a claim?
I think I've touched on that because those were the main areas that I looked at, but I would say that the pre-notification rules are challenging, and particularly if you're not up to speed with all the changes in schemes and the legislation at the moment. I think HMRC pick up on inaccurate or wrong SIC codes. Again, taking that example I had before, a company that's dealing in recruitment probably isn't going to mention that they do software development, for example. So you can have up to 4 SIC codes registered, something maybe for consideration when each year comes round to check things. Um, the competent professional descriptions are usually quite weak and not always relevant. And another thing to mention is if that competent professional is up to speed with their own CPD. So they do need to remain up to date and current with their knowledge of their market and their own learning. No baseline description and overclaiming costs. It's actually fundamentally quite a narrow window of activities that once you've defined a project for tax purposes, it's only from when the uncertainty is defined that the activities that you can claim for start. And I would argue that if you've got 90% of the uncertainty resolved, the final 10% is tweaking. That, strictly speaking, probably isn't to be claimed for. So I see an awful lot of technical overclaiming, and that could be through ignorance or through maybe some of the poorer players in the market taking advantage.
Thank you. And the final question is, can a company make a claim directly themselves?
Absolutely. If they are confident in some of the subject matter that I've spoken about today, and I would say if they've read, or I would suggest at least BEIS 2004, CIRD 81900, 81910, qualifying costs that sit between 82000, and there's a software one as well that's specific that sits behind CRD 81960. But for me, if you're going to read one document as a company making your own claim, it really needs to be GFC 3 or Guidance for Compliance 3, which you could Google. I actually think it's a pretty good document for explaining some of the stuff that I've run through today, but it also gives practical examples of making some of the projects come to life with the do's and don'ts of what you can and can't do. And I do actually refer to GFC 3 quite a lot when I'm defending claims.
Perfect. Thank you so much, Kevin. We really appreciate you taking some time out to present this presentation, this webinar, sorry. And yes, thank you so much. We will be sending out the recording and the slides shortly. Thank you once
Okay.
again, Kevin.
Thank you. Thank you very much for inviting me onto the webinar. Thank you.
No problem. Take care. Bye. Bye.
Bye bye.